If you love your career and you want to keep going in your career, I would say invest passive. If you want to change your career and you want to be a real estate developer and a real estate professional and just flip houses and manage properties, go and buy your own properties. But the most important thing is that if you really want to get your taxes to zero, must become a real estate professional.
Some people think that passive investing means you suddenly turn into a millionaire overnight. That's just not the reality of how this works. It takes time.
Welcome back to the Peak Profits Podcast. Today's guest is Dustin Hendrickson, a real estate developer and syndicator with over 20 years of experience across development, design, construction, and project leadership. Dustin specializes in strategic land selection, wellness-focused design, and innovation development, with a mission to deliver high-quality, sustainable housing that enhances quality of life for both residents and investors. He's deeply committed to solving the affordable housing crisis, structuring hands-off, high-yield real estate opportunities, and helping busy professionals build wealth without taking on more work. Dustin, we are excited to have you on the podcast. Welcome.
Hey, thank you. Yeah, that introduction pretty much sums it up. I'm glad to be here with both you guys, Chris and Bryan.
Absolutely. So you're located in South Dakota. You're building these wellness design development projects. Can you tell us how you got started in all this? You've been doing it for 20 years. You have quite the background.
Well, my mother actually got me started. She wanted to buy a duplex because she wanted to start having investment properties. And it was in 2003. So it was very expensive. It's kind of like it is now, where it's so expensive, it's hard to buy anything. And so we decided, let's just develop. We can develop for less than we can buy for, and we can get a better product. So that's what we did. We started developing. I did all the work, the labor, and she's a CPA, so she did the financing and the accounting, and she really likes to work with tenants. So she did all the property management as well. So I learned a lot from her, and then I also did all the work.
There you go. Did you come from a construction background where you just started ground up type of development?
Yeah, Yep. I had been doing cable work, or so like telephone pole lineman style work on the low voltage side of things. And I owned a roofing company. So I knew all of the contractors, so I could show up on the job sites and ask any contractor for help with any type of task that I was doing.
That's amazing. That's it always goes to speak about your network as well, right? The ability for you just to call in a few friends, people you know that you can trust to get the job done and get the job done right is obviously extremely important. You talk a lot about wellness focused design. Now, for anyone who hasn't been on the website, we would strongly recommend going on the website because the video on there does describe it very, very well. But Dustin, can you talk through what is wellness focused design and why is that so important for new developments?
It's very important because a lot of developers are focusing on that now. But what it is, it's simply described as a style of building that makes you feel better when you're in that. So if you ever go to luxury hotels, you go to certain places that make you feel really good when you're there, they probably implemented a lot of wellness design. Even certain coffee shops, you go into some and they're bright and airy and they got raw materials and bricks and plants, good smells. That's all kind of wellness design. So, but the simplest way to implement more wellness design is to put in bigger windows. So natural light is one of the best ways to implement wellness design. And then, do you have a natural connection? So do you have a connection to nature? So if you're around areas of nature and with large windows, there's kind of that, you just feel like you're more into nature, and that makes you feel really good. And then it's a retention. Tenants want to stay there.
Yeah, and I think that resonates a lot with where we're at as a society and the wellness trends that are going on, health kicks, and so living or providing, I guess, a new high quality asset. One, I can speak for what you just said. Natural light. My wife is like huge on natural light. So if we can find an apartment, like our last apartment didn't necessarily have it, but our new apartment does. And so it goes a long way, I think, on just even the mood when you wake up in the morning and get a lot of natural light in your apartment. But then when you go and figure out, I guess, let's start from the beginning, because this is like piquing my interest and thoughts. If you identify land or a place that you want to develop, how are you going to structure or think about your development project? of how many units you want to buy or build, and then kind of the products that you're going to put into this development in itself, right? So I'd imagine you're building with um, higher quality products that you're going to be putting into these development projects, right? So when you finish this project, this is a higher quality of living type of place that tenants tend to migrate to.
Yeah, yeah. So for me, it's kind of common sense now on what to use, but it took many years to figure it out. But I would say raw wood floors is a very good example. If you can have a really nice raw wood floor with very little sheen, it feels more natural, feels more real, like you're walking on a real surface. Um, and then always floor to ceiling windows because it draws your view outside because you're not looking at the wall anymore. You're looking through the window out to outside. So that's huge. Covered spaces. So you don't want to ever have any steps. So if you've ever had any steps off of, like, once you come outside and you have a bunch of steps to go downstairs, it doesn't draw you outside as much. So if you have the similar planes where you'll end up going outside and using that space more. So zero entry, I guess we could call that. Um, and then higher quality lights. Lighting's very important. If you have real cheap lighting that's real bright and harsh, people do not like that at all. And that's why lamps are popular because it's really, really good lighting. But yes, if you can incorporate that, and then you can incorporate as much nature as possible. So on our units, we use smaller boutiquier buildings. So we do many 14-plex buildings instead of one big huge building. This allows us to have 2 exterior walls in each unit. So now you have light that comes in from 2 directions, and it's important to have multi-directional light. It's higher quality. So you get different light from different angles. So north light is the best for taking pictures, but north light is not very direct if you're in the northern hemisphere. So that northern light's great for lighting, but then you want some direct sunlight to come in too. So it's good to have multiple angles of light. It just there's something about it that is very there's a human element of it. So when you go into an area that has light from every single direction, you'll notice it feels different than if you just have a lot of light from one plane coming in.
It's funny you mentioned lights because I was in Lowe's 2 weekends ago for over half an hour trying to figure out which light bulbs we wanted to put in to our new lamps that we just got. So you're bringing me back to a little bit of PTSD there because that was a long time staring at light bulbs and evaluating the different, whether it was bright light, soft white, or all of the different shades and things that you can get. So how Dustin, how did you get to understand? Because you've just shared things that I never even thought of there around like the different angles of light, whether it's north, south facing light. Everyone always talks about kind of south facing gardens or yards and things like that for the sunlight. You mentioned things like the plane as well, so not having to go up and down stairs. Like, how did you get to know this? Because you said now it's kind of second nature to you because you've done this for over 20 years. But kind of, can you talk us through like the evolution that you went through to get to this point where it's kind of second nature, and how kind of some of the key lessons you learned away?
Yeah, so I have a highly critical mind, and some people can't handle being around me because I kind of critique everything. I try not to. I try to be aware of who I'm around, but I'm very critical. So nothing's ever really good enough. We can always improve. We can always improve. And I was able to build these units from land development all the way through disposition. So I was involved in every aspect. And I also built custom homes for people. So I would get all of their input as well. And I realized that zero entry, there's just something about it that was much, much better. And I started critiquing my feelings more, like, why does this feel so good? And being in those environments over and over and over, I started realizing, because when you're on the single plane, it's like when you step out and you go onto a pool deck and the pool's right there. It's very, very usable. But if you go out to a deck, have to go down the steps, and then you go into the pool, it's just not quite the same as when you're on the pool deck that has the pool, even with your living area. And so when you see the super, super high end homes, that's what they have. And so you started seeing like, okay, this home is way nicer than that home. And what's the difference? The only difference is that it's flat and there's no steps to go in anywhere. So it's all zero entry. Drive in your garage, there's no steps to go in the house. There's no steps from the porch to the sidewalk or to the backyard. And so you start just kind of adding that all up, and then you start getting the critiques from the people that live there. And you realize no one really likes stairs, but they just put them in because they think they're supposed to. And it's easier to build a house with some steps because you don't have to actually design all the planes into it. You don't have to do any thinking. You just, oh, we'll just add a couple steps there, add some steps over here. It's no big deal. Um, and so that's just how I did it. And then you start, after you build a house, then you start realizing this light is not that good. And why do people hate going to hospitals, and why do they hate going to Lowe's and Walmart? It's because the light comes down on you, and it's fluorescent-y light, and it's harsh. And they call it, sterile environment. So all white, hard, like white tile, hard floors, echoey, harsh light is an overstimulating place. I also have a son with autism, so I learned from him. He would voice his opinion more, and I learned that if you controlled this overstimulation, his anxiety is always in check.
That's awesome. And yeah, I mean, I just thought about when you were describing that single plane. I've never thought about that, but I think about the Instagram reels or things that like target me, where they have like these drone shots of these insane houses where you go into this backyard and it has like this huge pool that, but yeah, they have like these huge sliding glass doors, but there's no steps. So you like walk from the kitchen through the living room, like out into this like insane backyard. And I've never actually thought about that. But now I want a house like
Yep.
that. I want a house and no
Yep.
steps. So maybe I got to move to South Dakota. But okay, so let's talk about investors. So you're doing all this work with development. You raise
Yep.
money from investors. What does a typical investment look like working with you, and how do you structure some of these development deals with your partners?
So we've had many different structures. We've done, single ownership, JV, which is joint venture, where you get max of like 5 people to invest in the deal, and you all have a say in it, and you all have liability. And then the majority though is LPGP, which is limited partner and then general partner. And the general partner does all the work. They have all the liability, all the responsibility. The limited partner puts up their capital, and that's all they have at risk. They cannot get sued. They don't have any responsibility of doing any work, so they can be true passive investors. And that's what wealthy people want, because you can never pierce that structure and get to the LP, because the LP is passive and he never made any decisions anyways. So it's very powerful. And then we've had many different models of waterfalls and stuff, but our current model is 20/80, meaning GP gets 20% of ownership, LP gets 80% of ownership, and they have a preferred return of 7%. So if you put $100,000 into an investment, you'll get paid $7,000 a year, and then we have to pay off your 100,000. And as soon as we pay off your principal of 100,000, now any profits that come in get split. You guys get 80%, we get 20%. So if there's $100,000 profit, 80,000 goes to the investors, 20,000 goes to the general partners. And the general partner has to sign on the loan. They have to get the financing. They do the asset management. They do all the things, all the work that goes into it. And we figure out when we're going to sell it. We provide your monthly updates. We just take care of all the work, and then we're liable for the property.
And is that where the term mailbox money comes from, Dustin? Because they essentially sit there
Yes.
and they give you the money,
Correct.
you do all the work, and they get a check in the
Yep.
mail.
Absolutely. So what I like to say is, I like to compare it to, if you go and buy a duplex and you do all the work and you do everything there is to it, your returns are going to be very similar. Because what happens normally is you'll buy something, and you will get, the first year you'll get this big tax incentive. So there's a lot of real estate guys like to buy at the end of the year, so then they can reduce their tax liability. They kind of know how much tax they're going to pay. They try to buy something at the end of the year. You get this property, you reduce your tax liability, but there's really no income coming in, because it's kind of just the way real estate works. You have to improve the value before there's enough income to pay to go over break even. So you get enough income to pay the bills, But if you buy your own duplex, you're going to be asset managing, you're going to be property managing. You have to find the tenant. You usually have to even do the maintenance and the turns, because if you don't do that, then you're going to go negative. So you've got to do all this work. And then if you lose a tenant, you might have to cover the mortgage for a month. So there's all these things you have to do. And then in 5 years, you're probably going to double your investment. And that's what we do. Every 5 years, we double your investment. The first year, you're going to get tax incentives. You don't get any distributions till the second 2 to 3 years is when you get your distributions. Then there's usually a refinance. So then the refinance, what we want to do is make you whole. So if you put in 100K, we want to pay you back your 100K, because the sooner we can pay you back, then we get to start participating in the profits. Then from year 5 to 10, we start looking at a sale. And year 10, we don't really want to hold them for longer than 10 years because they start to get dated. The maintenance starts to get high, and we can usually sell for more than it costs us to build a brand new building. And then when we build a brand new building, we add a lot of value when we build that, and we get tax incentives that usually last up to 5 years. So
That was no.
I don't know if that was too much. I hope it
No, that
wasn't
was
too
well
much.
explained, I think, because a lot of people that listen to the show are trying to identify exactly that. What path is right for them? Do they want to go buy the duplex down the street and potentially put a $100,000 down payment in maybe a $300,000 property, right, or $400,000 property where they can now be a landlord and rent that out, whether it's 2 or 3 units? Or are they exploring options like this where they are making a few $100,000 a year? They're doing very well in their W-2 or their career. They might not have the time to go out and be a landlord, but they could find people like you or opportunities to be more passive, but have their money backed by real estate assets, right? Not in the stock market or the volatility of
Yeah.
public markets, but put it into high quality assets like yourself. So, um, with your development, you mentioned maybe 2 to 3 years they won't get any distributions because I'd imagine that is the time period where you're actually developing the property. You did mention potentially a 10-year hold. So when you
Yep.
develop and then you refinance after that project is finished, do you put tenants in and then you are managing that property as a rental and providing rental income? And then when it makes sense, maybe 5, 7, 10 years down the line, you're going to sell that for the potential upside gain in the equity to provide their investors the return that they're
Yep.
looking
Correct. And then at that point, we can 1031 exchange that property as well. So you can keep all your tax advantages and roll it into the next property. So we do offer that. But in my 20 years of experience, I found that there's one really good year out of 5 usually to sell. And we haven't had one of those in a while. It's been pretty tough sledding for the last 3 years for a sale. But real estate is made to be held. So it's supposed to be held. It's not supposed to be this massive cash flow machine. It can become that, but the main thing is to be a tax haven, to defer all your taxes, and then to also create generational wealth, to be really passive. And so majority of the money you make on it is appreciation, and the distributions are more there to show you like, hey, this is actually in the black. It is a successful project, but majority of the time your money comes on the exit. We do like to refinance though, to get as much of your initial principal back as possible, because we find when the investor gets paid his principal back, he's not as worried about a sale. And so then we don't have the pressure to sell, and we can sell when the time is right, which is usually an offer that we get approached with. We usually don't put them on the market. People know that we have a lot of property, so anyone that's looking to buy, they approach us. But one more thing on what you were saying is, how do you know what you want to do? If you want to buy your own property, if you want to invest, if you love your career and you want to keep going in your career, I would say invest passively. If you want to change your career and you want to be a real estate developer and a real estate professional and just flip houses and manage properties, go and buy your own properties. But even those guys sometimes need more tax advantages because they have so much passive income. They can use all of the tax benefits we provide. So if they have a really good year, they might want to even take their 100K, put it into one of our deals, because they're going to get about $85,000 back in depreciation. So they can bring their taxes closer to zero. And if you do it right, a real estate professional should be able to get their taxes to zero.
That's a really good point to bring up, around the whole point of real estate is not necessarily to be this massive cash flowing engine. Like, sure, it comes as part of it, to prove that the property is profitable, and there should be a kind of element of cash flow to it. But the real aim is the long term play, that the doing this multiple times, right? You mentioned 1031 exchanging into another deal. If you've doubled your money, you can then put that into another deal, and maybe in 5-7 years you've doubled your money again. If you do that 2 or 3 or 4 times, you can see how quickly that can start to snowball. And but it just doesn't happen overnight, right? Like, some people think
Yeah.
that passive investing means you suddenly turn into a millionaire or overnight. That's just not the reality of how this works. It takes time, it takes reps, it takes consistency of investing, going into various different asset classes. So how have you structured that, Dustin, for yourself? Like, you've obviously done this now for 20 years. You've rolled a number of properties. How many units is it that you have under management?
Well, we currently have, I don't know, 1,500 under management, but we're scaling pretty rapidly now. So overall, I probably had 4,000 units total. Some of the units we were buying and selling, more acquisitions. I prefer development, but at a point there, from 2015 to 2021, it was super good environment, and you could just flip and roll and keep recycling. So it's easy to stack up lots of units. That's really hard to do that same model. In fact, I don't think that's even feasible anymore. It's really hard to find a super good deal. And so that's why we started developing, so we can create a pipeline of deals. But roughly, 1,500 units now, I think we are managing. We've got 300 and some under construction, with another 500 that's in development phase, and probably another 2,000 in the pipeline that'll come online over the next 2 to 3 years. So we're really hitting our stride now, because we found a plan that's scalable, repeatable, simple, boring. We can just put this thing everywhere, and almost every community needs something like this. So we found something that works well, and we continue to go with it. But structuring, I mean, we use all kinds of different structures, but the most important thing is that if you really want to get your taxes to zero, must become a real estate professional, which means 51% or more of your time is spent working on your real estate deals. And either that could be you or your wife. And if your wife is a stay-at-home mom, or she doesn't have a job, she only has to, I think it's 750 hours a year she needs to work on real estate. So it's like, I think 12 hours a week, something like that. So maybe it's 15, but so it's very easy to accomplish if one of you doesn't have a full-time job. And so if one of you is a super high income earner, one of you should definitely be a real estate professional, because if you send half your income to Uncle Sam, you can take all that money, put it into real estate deals, and pay almost no taxes. So instead of paying Uncle Sam, you can put it in your own real estate deals.
That is where everyone wants and should be. It is the real estate professional status. If you can get there, is a huge unlock for a lot of opportunities, and that's what the wealthy do. And people, rag on the ultra wealthy and high net worth for maybe not paying as much taxes as some of the blue collar hardworking individuals throughout the country. But there's nothing illegal here. They're just legally uh, right, using depreciation and offsetting tax codes from the tax book to offset their taxable income. And it's insane what you can actually do to keep a lot more in your pocket by leveraging real estate and a depreciating asset like that. Um, so you just mentioned there too, from a developer standpoint, can you kind of go into some of the risks associated with development projects, or what you might run into? What is the what are the riskiest time periods of development, from like breaking ground to finishing the project, and what are some of those things that maybe investors
Yeah.
or people should be aware of that they don't realize about development itself?
So development is, it's the more you have, the more, or the least experience you have, the more risky. So if you've never done a development project, there's inherently quite a bit of risk. If you've done a lot of developments, there's almost no risk. The risks are all macroeconomic. The riskiest part, in my opinion, is the entitlement process. But if you structure the deal correctly, it's not risky. It's just a process. So say you buy a piece of land and you want to entitle it to put your building on it, and then they say no. Well, now you bought a piece of land. Now you got to figure out how to sell it, or you got to build something else, which I would just sell it. But instead of doing that, you just structure the contract that you'll buy it once it's rezoned or when it's entitled. So I want to put this project on it. I'm going to go jump through all the hoops with the city. And when they approve all the stuff, I'll pay you this much, and I'll even pay you a little bit more than what you want for it, or I'll pay you full price, or you can give them a few terms in their favor. And then they jump through the hoops with you because they wanna do it. And then when you get it through the entitlement, it's actually probably worth more than you're paying for it, because entitled land's worth a lot more than unzoned land or anything that's zoned the not the best use. So if it's not zoned the best use and you bring it to best use, you can easily double the price of the land, if not more. So that's where I go. That's what I do. I do that. And then the next thing is getting your permit. So you got to make sure and go through the whole permitting process and get that. But it's very, very rare to see a product that doesn't actually get developed. Because if you're developing it, even if you're really bad at it, someone will come and buy it from you and take it over, develop it for the most part. I mean, once in a while you'll see a stalled project, but it's usually from someone that times change really rapidly and they weren't capitalized enough. They were kind of going way too fast and they just ran out of everything and they were robbing Peter to pay Paul. Uh, that can happen once in a while, but that's very rare for an experienced developer to do that. And then the other, so the construction, to me, it always gets done. It always happens. If you've never done the building, there's probably going to be quite a bit of stuff that you don't plan for. So you should have anywhere from a 10 to 20% contingency. And then when you get the building constructed to full lease up, that can be risky as well. But if you've done your market research, you should know whether your product's going to work or not. So the more experience you have and the more you know about your area, the better it's going to be. So if you really don't know what's going on, and you don't know if your product's desirable, and you don't know if people even want that product in that area, everything can add up and get risky. And also, the cooler your building is, the more risk that there is in it.
Dustin knows what he's talking about, people, and he's developed a lot of projects, so he knows the demand is there once he finishes. And one quick follow-up question on that: what does like debt structure look like to you? I know you have investors, but if you buy a piece of land and get it entitled,
Yeah.
how are you getting the capital outside of like your own capital that you have? Like, are you getting a loan or construction loan or is there a development loan to build this? Or are you taking draws from the bank, or how does that work? What is that structure?
So we've done it many, many ways, from just writing a check for the land to borrowing 50% to 80% for the land. Usually banks won't borrow you 80%. When times were a lot better, though, money was kind of free, so you could get a lot more than you can now. But now it's typically 50% if you borrow, so you got to come up with 50%. We've raised money so we've got a land fund, so we've raised money in our land fund and we bought land with that. We've also structured the buy to line up perfectly with our deal. So we've raised for an entire deal. Now we come in, we put the money, we put the equity in, and the bank loan, and everything coincides and closes at the same time. So we've done almost every single way you can imagine. And you can also do carry seller back, where you technically own the land, and then you pay them at closing on the property as well, but you can still work on the land. We've also, hey, partner with us, put your land in as equity, and then we go and put the deal together and bring them in as a partner. So now they're on the GP side. So we've done every way possible. It feels like we've done them all. I really like the land fund because we can give our investors a boost. We can give them quite a big return because that land is going to be worth double when we close on it. Because we take the land from raw land to entitled land, and then we put permits on it, and now that land, it was worth, $4 or $5 a foot. Now it's worth $10 a foot. So we can give the investors a 20% return, or we can boost their equity into the deal. We can do all kinds of things to sweeten the pot, and that's a really short-term deal. So it gives the investor kind of a quick win.
And one more quick question, sorry, is what does that entitlement process look like if you were to buy raw land? Like, who do you go to the city,
Yeah.
the state, and what is the timing of that process?
Yeah.
Or if you were to go and get something, can you walk us through what that looks like?
Well, the timing is different everywhere, but the process is always the same. And there might be less committees or more committees. So the more, what's it called, overregulated. The more overregulated an area is, the longer it's been there, usually, or even the wealthier it is, the more hoops you got to jump through. So if people need housing really bad, you'll find you don't have to do anything. You go right down to the local planning and zoning, or even the building permit. The engineer might be the same guy as the planning and zoning. So all the guys are there, and he's like, well, all you got to do is fill out this paper, and we can, we'll go reading in city council. They vote for it. It's always yes. In this, they'll tell you, like, we'll just vote yes for it. Just go through this process. It's a formality. It might take 45 days. That's not typical, though. Normally, you go to planning and zoning, they tell you what fits on it. You do a mock-up with civil. You fit everything together. Then you go to planning and zoning, and they say, we want to see this, this, and this. You got to have 4 bushes over here, 12 trees there, two egress driveways, certain these fire codes, and you get your plan all dialed up, and then, okay, submit it to planning and zoning. They approve it, goes to city council. They approve it preliminary, and then it goes to the second reading, and then the whole city neighborhood shows up, and they're pissed. And then you got to go through that, and then you got to talk to those people, and they might table it. And so they could take months. So, I mean, some areas take years, but a typical process takes us about 6 months. And then you get your second reading in city council. They pass it. It goes back to any comments for the city. If the engineer needs to tweak anything, they do, and then they record it. And then at that time when they record it, that's when we purchase it, and we purchase it from whoever's selling it to us. Once in a while, we'll buy it first. It just depends on if we know the process is going to go through. But we have so many opportunities now, we don't need to do that. We just say, hey, if we buy this from you, we will buy it when they stamp it at approval. And so the owner of the land takes the ride with us. But we have bought it. We have bought land before and rezoned it. And we've also bought land and tried to rezone it and got shut down. So we just found it's not worth going through all that hassle. Because once you buy it, now you got all these costs to sell it. You got to pay the realtor. And then you have to, it's just kind of a pain, and then it takes up a bunch of time. If it gets denied and we don't buy it, it just goes back to the owner, and then now he has to deal with it. And he also knows his land's probably worth less because they won't zone it for that particular use. But usually they'll tell you, this is what it is, and this is what we want there. And if you're fighting an uphill battle, it's a complete waste of time. Sometimes you can do it and you can get it through, but that's not where we find value. We find value in communities that want to work with us.
Can you talk to us a little bit about your land fund? That sounds like a really interesting concept. Can you kind of explain how do investors get into the land fund? You said about 20% returns, which is fantastic. It's obviously a great area for people to put their money. Can you talk us through that and how people can potentially get involved in that, Dustin?
Yeah, so I can let you know about our current land fund, which is actually fully subscribed, but we'll start another land fund shortly within the next 6 months. So this land fund, we identified 5 parcels of land that we could buy with this land fund, and it was capped at $4.4 million. And so we raised for the land fund. We closed a piece of land in Crooks. We closed a piece of land in Rochester. We closed one in Hartford. And we're closing 2 near Des Moines, one in Ankeny and one in Norwalk. So we're going to have 5 parcels that are closed in there. One of them in Crooks we've already bought out. So that one closed last year in September, October. We closed that with the land fund. We funded that one, started paying people at monthly 20%. So they put $100K in, they get $1,667 every month. And then, but we put that deal together and we raised all the money. So now we bought that portion out. So that piece of land was only in the land fund for 2.5 months. So it was in for 2.5 months. Then we paid it out. The people that were in the land fund in that piece in Crooks, they all just kept their money in the land fund to go towards the next deal. So now the next piece we're working on is Rochester, and that should be paid back within the next 3 months. And so they'll get, within 6 months, they'll have all their principal returned to them plus $1,667 a month. And we pay it every month on the 25th. So every month on the 25th, every 100K that you invested, you get 1667. That's a 20% return. And it's very simple. The downfalls of that is you don't actually own, or you just own land, and land's not tax depreciable. There's no tax benefits to owning land. So you don't get any of the tax advantages, but you get the immediate return. So it is a good way to, it's a good way to have a lot less risk in a short-term real estate investment. It's a good way to try it out, to see what you think about our company. And then, I always say the best way to see what you think about someone is to invest money with them, because that's when you look into them a lot more, right? So you put money in, now you're interested. You want to see what the project's doing, what these guys are doing. You read the emails, you actually care. You'll do some research on the area. And that is how you really learn if someone's a good operator or not. It's really hard to know how good an operator is without actually investing.
Yeah, I completely agree. And so I'd imagine you have like an investor portal and a investor experience that they could check you out. So I guess that's a good plug for where can people find you? Where can people learn more about what you're doing, the opportunities you have, maybe subscribe to a list and get in contact with you?
Yeah, mailboxmoneyre.com, mailboxmoneyre as in real estate.com. And then all the information's there. You can find our LinkedIn and our YouTube and our Facebook, all that stuff. LinkedIn is where I have the best content. You can see all the projects on the website. It shows all of our projects. And then if you sign up, you'll get emails, kind of showing you what we do, what we're capable of. But the best thing to do is to just get on a phone call with me. And if you like what you hear, come and look at the product. So you could fly out to Sioux Falls. We could show you 8 different apartments, and we could walk you through a bunch of the product, because we do have a model that is different. It's not the same as every other apartment. So it does take quite a while to understand why it's better, why it's different, why it's more passive, why are the ongoing costs less to operate this. And so I can walk you through and point all that out. It's really hard to explain over emails and phone calls, because I could literally talk about this stuff for hours just the depth of knowledge. It's hard. I don't really know it's hard to know where people are at and how much they can actually, how much information they can take in without getting overwhelmed, and do they understand it? So everyone's kind of at a different level. So a phone call is always the best, but we trickle the education into, so, wherever you're at, we can figure it out. But on site is by far the best, and that's the easiest way to just download everything I'm taking in, because you can see it. I can explain it, and you can see why we do what we do.
Sounds like I need to make a trip out to Sioux Falls. One, I've never been out that part, and it looks beautiful. But yeah, that would be a nice bonus to go check out what you guys are doing.
Come in the summertime for sure.
Yeah,
It's super cold today.
yeah, good note, because no, it's too cold up there in the winter.
Yep, very cold.
Dustin, this has been amazing. Anyone listening, check out mailboxmoneyre.com. Go and schedule some time with Dustin. Dustin, is there any kind of final pieces of advice other than reach out to you that you would share for anybody listening to this before we say our goodbye?
Mindset, everyone, most people in the industry talk about it, but improve your mindset, and always, look for more knowledge. And reading books has really helped me to understand that there's always something out there. There's always somebody that knows more. And that's where you got to start. You got to just start by consuming all the knowledge, and then you got to start doing. Eventually you have to start doing. So, but mindset expansion is one of the, if you're ever stuck, you need to expand your mindset. You need to take more in, because there's just so much information, so much knowledge out there. And if you have a will to do it, you can do it. So
great piece of advice. Well, Dustin, thank you very much. We will put the link to your website so that people can go straight on there and request some time to speak with you. But this has been fantastic.
Thanks, Dustin.
Yeah, thank you for having me. And God bless you guys. It was great interview. You guys asked some amazing questions. It's actually one of my favorite interviews. I love the questions you asked. Most people ask more fluff stuff. So I can tell you guys know what you're talking about, and you're interested in real estate.
That's a great compliment. So thank you. But yeah, everyone listen to this episode. You heard it here from Dustin. It's good quality, good value. So no, thank you, Dustin, and we'll definitely keep in touch.
All right, thanks, guys.